Hello and welcome. You're watching Market Cafe with me, Ankita Saxena, and with me is my co-anchor Snehi Shah. It's a fresh day of trades, and this is the show where we take you through an hour of what moved the global markets and what will move the Indian markets. But first up, let's quickly go across and see how the global markets moved last night. Snehi, I see a sea of red coming in there, cuts coming in from all the markets. And oil prices jumped, and how, and of course it was on the back of a news flow that we will be discussing. And also the bond yields rose yesterday in trade.
Absolutely, Ankita. So all of that is correct when it comes to the action on Wall Street as well as other global markets. Let's start by looking at what happened on Wall Street yesterday. And S&P 500 futures are near flat Tuesday night as Wall Street looked beyond the losing session that marked the start of the holiday shortened trading week. The moves follow a down session on Wall Street, which was the first of the holiday shortened trading week. Remember, yesterday the US markets were closed on account of Labor Day. The Dow finished close to 200 points, or roughly 0.6% lower, while the S&P 500 and Nasdaq Composite slipped 0.4% and nearly 0.1% respectively. Now, part of the downward pressure came from oil prices, which rose after Saudi Arabia and Russia extended their voluntary supply cuts. So that added to the oil prices as well, and that boosted the oil prices to go higher. Investors will watch Wednesday for economic data in the morning on the US trade deficit and services industry. Also, a new beige book which summarizes economic activity will be released in the afternoon today. On the earnings front, you've got GameStop as well as American Eagle Outfitters and ChargePoint. These stocks are among the stocks related to report earnings after the bell today. So this is largely the handover coming in from the US markets. Largely negative, not very negative, but negative nonetheless. Slight slips, but slips as well. Let's look at the European markets, and the European stock markets closed lower on Tuesday as a boost from Chinese stimulus measures faded. The stock 600 index ended 0.2% lower. Chemical stocks were down around 1.2%, big cuts coming there, as oil and gas climbed 1.2%. Now DAX closed with a downtick of 0.3%, whereas FTSE also down 0.2%. So largely flat, slightly negative handover coming in globally. But Ankita, this is on the equities front. Let's also look at commodities then, and crude. All the action is being seen in crude. Crude prices have been going up. Tell us why that's happening.
Yeah, so the action is coming from the crude prices, and that is also weighing down the markets as well. And of course, giving a boost to the oil and gas stocks, but weighing down the markets. Now, oil prices ticked up, and they have been going up as markets are now worried about the supply shortage after Saudi Arabia and Russia extended their voluntary supply cuts to the end of this year. Now, Saudi Arabia will extend its cut of 1 million barrels per day until the end of December, and Russia will also reduce its oil exports by 3 lakh barrels per day. Now remember, the Saudi and the Russia voluntary cuts are on top of the April cuts that were agreed by several OPEC Plus producers, which extends to the end of 2024. Now Brent crude has already touched the $90 per barrel mark for the first time since November on Tuesday. And it is a 6th straight day of gains. The crude has been gaining, and WTI is also hovering around that $87 a barrel mark. After touching a 10-month high in the previous session. Now, near-term prices for oil traded on Tuesday at the steepest premium since November to later dated prices reflect concerns about the tight near-term supplies, and that has been really worrying the markets. The oil prices going up, and of course yesterday we also saw the treasury yields tick up, and of course that's a negative for the market, and that weighed down the global market. So that's the handover coming in from the global markets. But Snehi, what are the cues that we are watching out for in today's trading sessions?
It's a very heavy day today because lots and lots of cues to watch out for. So let me take you through that. Back home on the corporate action front, you've got the buyback issue that is closing for a list of companies, that is KRBL, FDC, IndiaMart, as well as Piramal Enterprises. Now also on the corporate action front, today is the last day for the eligibility of bonus issue for JTL Industries. So watch out for this one. On the annual general meetings front, you've got REC, CMS Infosystems, as well as Tanla Platforms that will be holding their annual general meeting today. On the IPO action then in the primary markets, you've got Ratnavir Precision Engineering will close for subscription today. It is the last day to subscribe to this IPO. Now, Jupiter Lifeline Hospital That's the IPO that will open for subscription today. So lots of action on the primary markets as well. And on the other events, you've got the Fed Beige Book Economic Survey releasing today in the afternoon. On the auto front then, MG Aster Black Edition will be launched in India today. It's a really good looking car, so watch out for this one as well. Motorola is all set to launch the new Moto G54. The new Nokia 5G phone will be launching in India today. And lastly, on the global action front, PM Modi will visit Jakarta to attend the Asian Summit. Jakarta is in Indonesia, so keep an eye out for all of these cues in today's session.
All right, we will be tracking all those cues very closely. But then moving on to what happened in the global markets, the news overnight. Well, the odds of the US reeling under the recession over the next 12 months is now just 15% according to Goldman Sachs. The forecast lowered from the earlier 20%. Now, Goldman Sachs believes that the central bank is done hiking rates, with borrowing rates going from 0 to 5.5% over the last 18 months.
And Federal Reserve Governor Christopher Waller says that the recent round of strong economic data will buy Fed some time as it decides whether additional interest rate hikes are needed to control inflation. Last week's non-farm payroll data showed a growth of better than expected 187,000 jobs in the month of August. The biggest concern will continue to still be inflation, flags Waller.
And staying with the macros, Australia's central bank has kept interest rates steady for a third month, encouraging speculation of the tightening cycle was over as policymakers indicated they have firmer grip on prices. Although they have reiterated that further tightening may be still required to bring inflation to the heel.
Well, shifting focus away from macros and looking at tech now, the chip design firm ARM has said that tech giants, the likes of Apple, Alphabet, Nvidia and other big tech majors have expressed interest in buying up to $735 million shares. Whether or not the said investments will work out is yet to be known, but the companies mulling the same reflect on the importance of ARM as a separate entity.
And staying with ARM, the company has also announced it will make as much as $4.87 billion from what is the biggest US stock market listing this year, with primal focus onto institutional funds. Now, the company is aiming for a valuation of over $52 billion in its IPO.
Well, and lots of action happening on the sports front because the BCCI has announced its 15-member squad for the upcoming ICC Men's Cricket World Cup. Captain Rohit Sharma and Chief Selector Ajit Agarkar announced the team in the press conference held in Kandy, Sri Lanka. Hardik Pandya continues to be the vice-captain of the team, and despite playing the last one-day match in March and being injured for months, KL Rahul has been included in the squad after passing fitness assessment at the National Cricket Academy. Meanwhile, Tilak Verma and Prasidh Krishna, who are currently in Sri Lanka for the Asia Cup, have been dropped, and also another surprising drop coming in is Sanju Samson.
Right from beginning, if you see, there is always a disappointment, when some players misses out, but you can only get 15 in, and the talent that we have in India, obviously it's hard. So some of the guys will be disappointed, but it happens. I've gone through it. I know how it is. So you just have to keep your chin up, be ready for the opportunity whenever it comes, and look forward, as simple as that. For us, it was about how we can create a good balance, good all-round options within us. So we looked at everything, and then this is possibly the best 15 we could get.
I think plan तो आपका बहुत पहले से शुरू होता है, ये नहीं कि एक महीना पहले आप वर्ल्ड कप के आते हो. But I think a lot of the guys picked themselves. I think more नाम क्योंकि there were a couple of fitness issues which we had to look at, which fortunately, the big players for us, all three have come through who've had long-term injuries. Tino are okay. KL is obviously looking good. Discussions तो बाकी नामों के होते हैं, but you try and find the best balance, and we feel this gives us the best balance or gives us the best chance to try and do well in this World Cup.
Well, let's absolutely. This is going to be the 15-member squad that is going to lead the charge come the Cricket World Cup that is going to start for India on the 8th of October in Chennai versus Australia. So this is going to be the team that is going to take it forward, and Rohit Sharma and Ajit Agarkar both feel that this is the best combination. Of course, this is the Asia Cup team that has been retained minus Tilak Verma and Prasidh Krishna, because remember Asia Cup was a 17-member squad. This is a 15-member squad. So you have the usuals in Rohit Sharma, in Virat Kohli, in Shreyas Iyer, KL Rahul of course fully fit and making a comeback as well. Ishan Kishan has also been included in the World Cup team. Rohit Sharma saying that there is a possibility that both of them could play as well. They have gone in with 4 seamers. There are all-rounders in the team, of course, in Hardik Pandya, in Akshar Patel, in Ravindra Jadeja. Kuldeep Yadav has also been picked in the team. Mohammad Siraj, Jasprit Bumrah, Mohammad Shami. So it's looking like a good, strong team. But yes, questions are being asked of not taking Yuzvendra Chahal. Harbhajan Singh saying as much on Twitter, saying that he's a pure match winner. Why is he not in the team? So Rohit Sharma saying that every time a big tournament comes, there are going to be players that do not make it to the team. It is going to happen every single time. There is nothing that anyone can do about it. So this is going to be the best combination as far as the Cricket World Cup in India is concerned.
Well, that's right, Karishma, because very surprising, you know, Ankita, that Yuzvendra Chahal has been dropped out, and also Sanju Samson, because if you see Sanju Samson's averages, you know, he's been batting at, you know, a 71 average all of 2022, an average of 30 in 2023. If you look at his ODI average as well, it's at a solid 55. So it's very surprising that he's been dropped out of the squad. But well, the top order is strong, middle order looks strong as well. Our bowling lineup also very strong, but the only iffy part about this entire squad is the top order, no matter how strong it is currently not very active when it comes to their form. So we'll see how this pans out for India. Well, we will all be rooting for India in the World Cup, so let's see what happens.
All right, with that, it's time for us to take a quick breather. After the break, we go domestic.
Hi there, welcome back, and thanks for still staying tuned to Market Cafe. This is ET Now. Now, one of the hotels where many dignitaries and delegates will stay during the G20 summit is the Taj Hotel in Delhi. So my colleague Samir went on ground to get a taste of the welcome in the store for attendees of this G20 meet. Take a look from the hotel itself.
Atithi Devo Bhava. These are not just the 3 words, but the true emotion which will reflect in India's hospitality. Delhi NCR hotels, they are all geared up, they are all set to welcome foreign delegation, those who are coming for G20 Global Leaders Summit. Right now, we are standing here in Hotel Taj Palace, SP Marg, and over here as well, a traditional, Indian traditional theme that has been captured, and that will be reflected when they will be welcoming the foreign guest. Let me show you this thali. That is also designed on the theme of peacock. So this has got the beautiful peacock feathers you can see. Now this is a silk stole that will be given to foreign delegate. The Odisha craftsmen, they have prepared this stole, and local for global. That is the theme that will be reflected as well.
Everything would be very local, so to say. And, you know, whether it's food, whether it's the small takeaway gifts or whatever it is, we will be doing, showcasing every part of India. So like the stalls that you see at the background, these are going to be used for the welcome, which are Ikatkari stalls. This has been done by local artisans. So these are the kind of, and the menu that has been prepared by the chefs, which is bearing in mind the millet of the year. The whole theme has been done on that.
with the biggest meet for the G20 summit right around the corner. Preparations have been in full force. And so ETNA's managing editor Nikunj Dalmia caught up with the experts to get a sense of what one should expect of this meet and why should it be of significance. Here's an excerpt.
I think both domestic capital as well as foreign capital have a role to play in India's growth, which is why you're seeing large pension funds and insurance companies invest in the country. But I certainly don't think that from that point of view, India is credit starved. And indeed, if you look at it from a debt to GDP ratio perspective, both overall, public debt as well as private sector debt, India ranks very favorably in that. And I think that works well for us in the sense that you're not overstretched. And going ahead, I think it'll be a combination of both domestic capital as well as foreign direct investment, which India is looking to attract in large dollops, which will contribute to the India growth story.
I'd agree with Shubhrakant on that. And in conversations with various global investors over the past year, they're all very keen to come to India. As we talk to various global firms as well, they're looking to de-risk supply chains and invest a lot more in India. So India is clearly the destination of choice for all global investors today. The challenge from a G20 standpoint will really be on debt for various low-income countries. And this is where India can play a role in terms of being a negotiator to help solve problems. IMF has warned that medium-term growth prospects are weak. More than half of our low-income countries are either in or near to debt distress, and that is double the number that we'd seen in 2015. So this is where the world does face a problem and needs to be resolved.
But carrying on that, I agree with Anish completely that G20 is about looking at the global finance situation. And I must, kind of call to attention the significant move that G20 announced last month, that there was 100 billion in pledges of what is called the special drawing rights. And this was to be channelized from the richer to the poorer countries. So it was a solid kind of translation of the ideology of one world, one family. And we must also acknowledge countries that stepped up, their contribution. So Paris, Japan, France, Japan, all of them enhanced their contribution to 40%. So I think the IMF is strongly set on a stage to help these countries. And this was also validated in what happened in Zambia and how IMF stepped in and helped. So moving on, I would really think that we must re-acknowledge the important role of G20 in ensuring this capability of helping the entire world and enabling the capability of achieving the SDG goals. Now, when this SDG goal target, because ultimately it's about the ability to achieve a higher quality of life. So refocusing on the world's achievement of SDG and using the access to capital, economy development and growth as a mechanism to be channelized into usage for public good, I think is an important linkage in the entire dialogue.
All right, that's the word coming in from experts on the role that the G20 meet could play on the global platform. But talking at the Global FinTech Fest, Finance Minister Nirmala Sitharaman spoke about the rise in the number of retail investors and the increase in demat accounts since 2020. Listen in to what she had to say.
I just want to place before you India's achievement, briefly that is, in making sure financial ecosystem in India is inclusive. In a span of about 4 years, the number of demat accounts has increased by 2.5 times, from 4.1 crore in 2019-20 to 10 crores in 22-23. A record number of mutual funds, SIPs, are being registered, which again helps in generating long-term wealth, and with a monthly flow in the mutual fund industry through the route, reaching all-time high of 15,245 crores in July 2023.
Moving on then, the market regulator SEBI is inviting advisors and industry shareholders to share ideas so as to make investment marketing better and avoid scrupulous claims to rope in investors in its push to protect the investors. Now here's an excerpt of that from the Global FinTech Fest.
All advisors have told us that how can we sell a product or advice or a service to anybody if we are not able to make a claim about the performance of what we do. And we agree because we understand that a business has to be built, you have to sell something to a customer. But it's just that, as I said, if you claim performance that your clients make 5 crores a month, that's not the kind of performance that we think is validated, to say the least. And therefore, structurally, we are trying to find solutions structurally that the good apples, there are lots of good apples, we're looking for those good apples to come to us and say to us that what is it that we can do to facilitate that you actually come in and give genuine advice to people. It's not simply an enticement mechanism and a machinery to entice people to come and trade in F&O and lose lakhs and lakhs of rupees while giving brokerage of many thousands of rupees. That's not the intent.
Alright, that's the word coming in from SEBI chairperson Madhvi Puri Booch. But let's get a move on then. An RBI policy approach should be balanced. Now that's the word coming in from RBI Governor Shaktikanta Das. He says too much of it may confuse the market while too little may misguide the market. Listen in to what he had to say.
Price inflation eased during March-April 2023 and moved into tolerance band, declining from 6.7% last year, that is 22-23. Headline inflation, however, is still above the target as per the latest data and is expected to remain so.
And well, instant trade settlement is likely to be implemented sooner than expected. Now, sources tell ET now that the 1-hour settlement of trades is likely to be implemented by March next year. Ankur Mishra had filed this report earlier with what he's picking up from the sources. Let's take a look.
Yes, sources say that the market regulator SEBI is coming up idea of instantaneous settlement in the stock market. Now, this was something which guidance was earlier given by the market regulator. Now we learn through sources that 1-hour settlement of trades likely to be implemented by March 2024. Now the thing is that market regulator is waiting for phased implementation of this idea of instantaneous settlement process in the stock market, and for that 1-hour settlement might be possible by March next year itself. The process of identifying the proper system for the same is already on, and the ASBA-like model for secondary market is also therefore likely to be implemented by Jan 2023. The whole idea is that in a phased manner the systems will be prepared so that instantaneous settlement is possible. And finally, sources have told us that by October next year, we may expect finally in our stock market instantaneous settlement will be possible. Now this will be something which will be new for us. From T+1 to instantaneous settlement, you might do it by next year October.
Alright, Ankur, thanks so much for taking us through all those exclusive details. But tell you what, we'll slip into a very short break. On the other side, we'll take you through a list of all the stocks that could be potential buzzers in today's trading session. So stay tuned.
Welcome back. You're watching Market Cafe, and it is that time of the show where we tell you all the stocks that you need to keep on your radar. But first up, we have Ansh in the studio who will give you all the setup for the F&O traders. Tell us, Ansh, what is the setup for F&O today?
Sure. So let's start with Nifty first. If you can see in the chart, Nifty has been making higher highs and higher lows for third consecutive session. However, the range formed in the previous session was the shortest in at least a month, which indicates lack of momentum on upside. Also on upside, a key resistance lies at 19,650 level. Only a decisive breach of this level will give an upside of around 200 to 250 points. But until then, we may encounter some resistance and hurdle at this level. Now, Now let's see what happened in F&O segment yesterday. Nifty saw some short covering with open interest declining by around 0.4%, which indicates short covering. This is a mildly positive sign. On option front, we saw active call buying at 19,600 strike and put writing at 19,500 strike, which indicates that option traders expect Nifty to take good support at 19,500, and there are some expectations of Nifty climbing above 19,600. However, as we have discussed, 650 is the level where we may face some resistance. So 19,500 to 19,650 seems comfortable zone for Nifty to stay there. So we may expect some sideways trend here. Now let's shift our focus to what FIIs did. In index futures, FII added merely 82 long contract, which is almost considered flat, whereas they covered 1,700 shorts. Now, covering shorts indicates that traders are losing confidence on index falling on downside. So, in short, Nifty looks range bound in the range of around 19,450 to 650 of 200-point range. Also, keep an eye on Nifty Bank as today is its expiry.
Yes, well, expiry for Nifty Bank today, Ansh, so we will be keeping an eye out for that. And while you're here with us, take us through a list of all the stocks that could be possible buzzers in trade today and the one that our viewers should be keeping on their radars for today.
Sure. So, Power Grid will be the first stock in focus for today's trading session, as company has been declared as the successful bidder in a tariff-based competitive bidding for an interstate transmission system project in Rajasthan, which they will establish and operate on a build, own, operate and transfer basis. Apart from this, Zen Technologies will also be in focus, as company anticipates its asset management company to grow approximately to 70 crore from its current 40 crore by 2025. Furthermore, they expect AMCs to reach around 150 crore by 2027-2028. NBCC will also be in focus, as company will be developing 17.9-acre land parcel owned by Kerala State Housing Board with an estimated value of around 2,000 crore. Star Housing Finance is also in focus, as company is expanding its presence in Mumbai by opening an office in Vashi, which is expected to drive growth in Greater Mumbai and surrounding areas. Lastly, Tata Power and Tata Motors will be in focus, as Tata Motors has partnered with Tata Power Renewable Energy to create a 12 megawatt solar project at its Pune facility. So keep an eye on the stocks.
All right, thank you so much for that, Ansh. We will be keeping an eye out on all the stocks that you mentioned. But the other stock that is in focus for a while now has been Geo Financials. After being removed from the BSE indices last week, Geo Financial Services will be removed from the NSE as well, including the Nifty 50 from the September of 7th, which is tomorrow. Now, Geo Financials has not hit the price band in 2 consecutive trading days at NSE, and even if it hits the price band tomorrow on the NSE, the exclusion will not be deferred any further. Meanwhile, MSCI and FTSE will continue to include the stock in their indices.
Alright, so on that, all eyes will be on Geo Financials today, but we've also got a slew of brokerages coming out with a bullish stance on India, what's supporting the growth in India and HSBC's constructive view on Indian equities. Is it the long-standing broader market rally? Let's go across to Ashesha, who will help us understand the rationale behind their stance. Good morning, Ashesha. Take it away.
Well, yes, HSBC has come out with a note on India's strategy. First up, they've spoken about mid-caps, where they say that mid-caps have rallied hard, which is a key symptom of a bull market. As far as premiums are concerned, they say mid-cap valuation premium stands at about 34% versus historic peak of about 40%. Analysis of cycles suggests that we are still midway and probably some jump up is left as far as cyclical recovery is concerned. Broader market bullish phases can still last, and there's still run up which is left in this cycle. Rising crude, food inflation in the near term are the key risks to watch out for in their view, while they remain constructive on the overall Indian equity market, which they believe will stay in the bullish phase even now. Any consolidation they believe is likely to be shallow and short-lived, and hence they perhaps believe that there's some run-up left in this equity market. They believe that India stands out, which is on account of the combination of strong GDP growth and resilient earnings outlook that they have in the coming quarters. They've listed out 12 key ideas in the Indian equity market: Jubilant Food, Nykaa, UPL, Torrent Pharma, Petronet LNG, Sobha, Prestige, Hero MotoCorp, Volta, Zomato, and from the BFSI segment, they've jotted out M&M Finance and Equitas Small Finance Bank. So these are the 12 key ideas that they've come up with in their India strategy note.
All right, thank you so much for that, Ashesha. But moving on then, another note that has come out on India is by Citi, and they say that the capex cycle recovery is on track and they remain overweight on capital goods, defense and CVs. Vinny is here to get the highlights from this note. Over to you, Vinny.
Good morning, and what the key highlights are coming in the India strategy note is talking about the momentum that we have seen coming in the capex cycle. They believe the overall conditions that are there in the country are still very reasonable. They remain favorable for the ongoing recovery that we're seeing in the capex cycle. They believe that the sustained public capex momentum and gradual improving trends will be something that will be driving the private capex as well. Let's not forget that this is the year before the election, so they believe that the public capex also will be something pre-elections will also see an increase coming there, and the government-funded infrastructure capex will likely pick up this year to 22% growth on a year-on-year basis. That's going to be railways, road, power projects, which will also include some of the renewables. That could be something that will be leading the growth over there as well. Now, overall, in terms of the private capex trends as well, what they are highlighting is that the Citi's analysts are saying that they had highlighted previously also in terms of the capex funds that are tied up with private corporates suggested a good momentum, and total sanctioned private corporate capex that has also started seeing a very healthy pace of improvement since FY19 as well. So they expect that momentum will be something that could be continuing for the capex cycle as well. And obviously that's just why when you look at it, what they're saying is they're reiterating their overweight stance on capital goods, defense and CVs, and they're neutral on selective stances on the cement space as well. Now, their preferred stocks come in at L&T, BEL, Adani Ports, Ultratech Cement, Ashok Leyland and ACC are their preferred bets in this play.
Absolutely, Vinny. Thanks for taking us through that. So we've got HSBC as well as Citi sharing their view on India and the Indian markets, both bullish on different sectors. Now, it's never been a better time to invest or build in India. That's the exclusive word coming from Rajan Anandan in this exclusive conversation with ET. Now, Peak 15 has 200 billion rupees of dry powder for potential investments. That's what he says. Listen into this conversation with Anurag Joshi.
There's never been a better time to invest in India. There's never been a better time to build in India, okay? I know there's been a lot of talk about the funding winter, but the reality is 2021 and the first half of 2022 was an anomaly, right? That's the exception, not the norm. We had $7 trillion of liquidity that went into the US markets, and that went into every asset class, startups, public equities, crypto hit $3 trillion. And then that obviously changed, right? As inflation went up, interest rates start going up, all that liquidity got pulled back. So if you look at startup funding into the Indian ecosystem, what's really important is to look at it over a period of a decade. In 2010, we had less than $1 billion that went into startup funding. Right. Okay, this year we'll have, I don't know, $10 to $12 billion. So that's still a 10x increase over the last 12 years.
And so there is hope for early stage funding for new entrepreneurs. I mean, things would nothing but get better for them.
Look, India today, if you just look at India dedicated funds, okay, there's been over 1 lakh crore of capital that has been raised over the last 2.5 years that is now waiting to be invested. If you look at our firm, Peak 15, we have 20,000 crores of what we call dry powder in the industry, right? Okay. Dry powder is capital that will be, that will be invested into companies. Yeah. So India doesn't have a shortage of early stage venture capital funding. Number one. Number two, look, seed stage, right? So seed stage is, say, you're trying to raise between 5 crores to call it 30 or 40 crores. That market is actually very active, right? In fact, if you look at our firm, our seed stage platform is called Surge. We've been very active over the last 12, 18 months. In fact, you know, throughout the period. If you look at Series A, which is, you're trying to raise between $5 and $10 million. That market is also quite active. Where we've seen a slowdown in over the last 12 months, I'd say 12 to 18 months, is in very large checks. Companies that are raising $50 to $100 million, right? There's also, again, there's a lot of capital. What has changed is the bar to raise that capital has gone up. So today, if you want to raise a growth round, if you don't have great unit economics or your burn is very high, it's very unlikely you're going to raise. However, if you have very strong unit economics and let's say you can show a path to profitability and the company is reasonably priced, and I use that term because it's very important. There's going to be ample capital, right? So that's why, you know, every month you'll see 1 or 2 companies that raise growth rounds, but these are very high quality companies, right? So that's sort of the current state of the union, if you will.
Wonderful. If you have to give a synopsis for peak 15 in 2023, what would you like to say? Generally speaking, how have your investments been? How the climate been?
So first thing about peak 15 is we did a big rebrand of our firm.
Yeah.
We used to be Sequoia Capital India, so that was probably the single biggest thing that we did. In early June, we rebranded our firm from Sequoia Capital India in Southeast Asia to peak 15. Like in terms of, if you look at our investments, what I can tell you is what I started with. There's never been a better time to invest in India. And there's also never been a better time to build. So we continue to be very active. As I said, we have over 20,000 crores of dry powder.
Yeah.
We see opportunity in many different sectors, right? From AI, from software for the world, from India, from consumer products, from gaming, from travel, from financial services, and fintech, which is sort of what we're talking about at this conference, as well as Indian entrepreneurs building for the world, right? So software companies. Let's take one sector we haven't talked about is manufacturing. Right? Manufacturing is now beginning to boom, and what we're also seeing is very interesting companies that are using IP-based or process, like new innovative processes to manufacture products at either a significantly lower cost or significantly better quality. So today we're seeing innovation everywhere in India. So we couldn't be more excited about the startup ecosystem in India.
Well, there is no better time to invest in India is the word coming in from Rajan Anandan amid all the news of funding winter. But with that, we are completely out of time on this edition of Market Cafe. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere. There's the market coming up next.